Good day, everybody. It's been a week since I've done an update. Brian here from quantlabs.net. Today is the 29th of June. So let's talk about what's been going on. The markets have been on a good rebound over the last week, which is good, obviously. Um, let's first talk about Forex, and our usual safe trade has kind of gone sideways again. This is the sort of thing, this is the USD Japanese yen. You can see there in the Ichimoku, it's kind of going red. The profit factor has been pretty good long term. This is going all the way back to last August. So that can be a good trade as long as this can somewhat stay positive. I'm hoping that's the case. All right. So that's probably the only currency right now that I see worth trading in terms of volume. The next one is oil. Oil's been in a big decline here, as you can see here, since September, and it seems to be reversing. A lot of it has to do with what's going on in China. I'll show that in a minute, but I just want to show you the major ones right now. So you can see here, we've got a long. Oil is moving up, kind of coming, hopefully bottoming out once it starts to go green. And usually, like right here, back in September would be a good time to get in. But right now it's been kind of in decline, and it's better to hopefully this will turn profitable. I think we're at that confirmation if it continues to move up. So one thing that drives everything right now is the dollar. And here's an example. So you can see here, things have kind of rallied, but it's kind of gone sideways again. And when that happens, usually, hopefully, I'll continue to rally. With the U.S. markets rallying, that should hopefully move up together. We can see here in the profit factor, it's looking pretty good. And if it does move up, these are good entry points right now as it stands. Gold, gold has been really flat for quite a while now, since November. It has peaked up here, end of December. All year it's been very flat. So the market's been fairly flat overall. If I show you the SPX, use a CFD, and see if we can find it here. Yeah, you can see here since October, this is a daily chart. Things were fairly flat for a lot of January, and it's been rallying since January 16th. And it's continuously starting to rally as well. A lot of the overnight Asian markets have done fairly well. A couple examples: JP 225, Nikkei. You can see it's kind of gone flat there. Some of the, like the German, is doing okay. See here, it's kind of gone flat, but it's pushing up as well. So they're all intertwined. As I said, a lot of it has to do with the dollar, depending upon what the Fed decides to do. And if they cut, you can expect everything to move up. Okay, so we've covered dollar, USD, Japanese yen, oil. We've covered gold. Gold is generally not performing as it should. Most people have gold in their portfolio for insurance purposes. The things to watch for is the treasury, because when things start to break, that's when gold will start to move up. But so far, everything looks fairly stable. No crisis brewing yet. So the one looks good here is the oil, and that could push up. Here's the problem: when the economy starts to move up and improves, what will happen is oil will move up, so inflation starts to kick in. A lot of inflation is, as I keep saying, is driven by national debt. When you look at Biden has spent $6 trillion in the last 3 years, they're not slowing down there. So unfortunately, inflation is going to be staying here, staying in place. Inflation, I don't know if we'll drive it down. Another big factor that I've learned is a lot of farms globally are not able to grow food anymore because of the weather, heat, and whatnot. There's very little to yield. So a lot of farmers are losing money. So what a lot of governments do, especially in the UK, is they're now allowing farmers to turn their fields into ecological zones, and they get tax rebates for it. And that's less food being produced on that field. And there's going to be predicting within 5 years, only half of those fields will be left to produce food versus ecological or environmental. So that's going to be a huge problem for farming because of that. Fewer farmers. And farmers aren't getting a lot of yield anyways, a lot of profit on what they do. Um, they might, if they're lucky, able to get what an average income is. And there's very few bumper years. So who knows when it comes to, because it's not about inflation anymore. It's about food security. That's going to be a big problem, probably in Europe. US, Canada, I can't really say. So there's that. One last thing I want to add is concerning, my frequency of posting here is a big reason for it. I'm in the midst of cashing out. I feel that the markets will drop long term. Here in Canada, it's very bleak. I think we are moving into a very bad situation for jobs. Not going to say why, but I'm sure if you read enough headlines, you know where I'm referring to. A lot of people are moving out of Canada because they can't find work. So a lot of people are moving elsewhere. The places people are moving to are Latin America. I have an option because I'm British born. So that gives me a lot of places and options to go. So I'm looking at that. So as a result, I'm cashing out. Now, in terms of if you're in the US or in Western Europe, I think it's all intertwined. I do think if we do start to see the markets short term are doing well, it's because we have some decent reports coming out for quarterly reports, which is fine. That's why we're getting a rally. But just a matter of some kind of catalyst to bring it all back down. Could be inflation, as I said earlier, oil, or just energy, food over the long run. Real estate, people are getting stretched, people are getting laid off, the consumer's getting battered pretty good. And what happens after that, I don't know. Well, I do know, but I just don't think it's going to be a positive long term sustainable growth. And I think we are later on in the year at some point, some kind of catalyst to bring it all down. Because right now, with the US debt around $34 trillion, the US dollar is somewhat holding steady. If this starts to drop, because right now I think it's 7% is interest paid out to service the national debt. At some point, that will be no longer sustainable for the US economy and US dollar. Everything will have to draw down and maybe even, I don't like to say collapse. So it's going to affect real estate. If you're in a home, I don't think real estate will go up a lot over the next few years. Property taxes are going up because a lot of cities are not able to fund themselves anymore because of problems I won't mention here. I'm sure you've seen the headlines, and property taxes are going up, and that's who's paying for all of this. And as property taxes go up, makes it less sustainable for people. There's going to be less demand for housing because it's too expensive and it becomes too unaffordable for a lot of people. So that will hurt long term on the housing market. So that's why I'm cashing out. And just to give you a story, right now in Canada, if I sell a home, let's say 1 million Canadian, can you live off that for the rest of your life at my age, early approaching mid 50s? The answer from what I'm seeing is yes, because of Canadian banks, dividend income, it's possible. I'm actually going to potentially make more money with that option than just getting a measly, low paying job that is not out there, anyways. So that's the unfortunate problem with the whole situation. So you're going to start seeing a lot of people downsizing in small condos. And I think that's the unfortunate thing, what's going on. Like I said, people here in Canada are moving out. They just can't afford it. New people coming in can't afford it. They don't see the prospects. There's quite literally no jobs. It doesn't matter. Well, it matters if you're educated or not. Some jobs, especially in IT or software engineering, some companies apparently are getting up to 2,000 applicants for these jobs. A lot of them are from overseas as well. And it's like trying to win a lottery. So if that's going to be continual, it's going to be very hard to sustain yourself. So as a result, I'm not going to stick it out in a home that I have to pay bills on, especially higher property tax that we're already facing, potentially 10 or 16%. But it's enough to spook the market. Anyways, we'll leave it at that. Thanks for watching. I will have a crypto video stream as well. Thanks for watching.